Wall Street doesn't make loud announcements when they move. They shift quietly and only reveal the upgrades when they're too big to ignore. And some of the most important upgrades in this industry don't show up with big headlines. They appear as platforms engineered in the background to fix what the last cycle exposed. After FTX collapsed, most traders just moved on. Rob Shearer didn't. He decided to build a trading layer that couldn't break and solved a massive problem they personally had that no one else could.
After FTX happened, it wasn't a question of, should we do this? It was really a question of hey, we have no choice. We can't let what happened to us basically happen to anybody else, ever again. And
Rob spent 8 years at Goldman Sachs, then joined Paradigm, the largest institutional options network in crypto, moving billions in daily volume. Today, he's leading Paradex, a next-generation decentralized exchange incubated by Paradigm itself, engineered for traders who want institutional-grade execution while keeping custody of their assets.
We get lumped into this perps DEX narrative, but for us, from day one, it was really about building a full-stack exchange on-chain.
Paradex is built as a full trading layer and privacy designed directly at the protocol level.
We have a fundamental belief that finance can't scale without privacy. Imagine going to a poker table and playing with your cards up.
And of course, they're not stopping at trading. Paradex is developing on-chain asset management tools, strategies, structured products, all running natively inside of their exchange. These features carry risk, guys, of course. Nothing here guarantees profit, but the engineering focus is very real.
This is our long-term bet on building basically asset management on chain.
And later in the conversation, Rob explains how the user rewards framework is being architected, not as the core product, of course, but as a long-term alignment mechanism for people who actually use the system.
XP for us is basically our point system at Paradex, so we're in the middle of season 2.
If you want a clearer view of where real on-chain innovation is heading, this is a conversation you will get a lot out of. It's wild to see that we're now at a point where DEX can match what centralized exchanges do. Lighter, Aster, Hyperliquid, Paradex, each one brings its own angle. And today you'll understand how they actually differ beneath the surface. Nothing in this video is financial advice. It's for educational purposes only. All right, everyone. With that being said, let's welcome Rob to the stage. All right, Rob, welcome to the channel. Very happy to have you here today. The attention has been, at least for a long time, kind of on these new decentralized DEXs, and more specifically, these perp DEXs, which you guys are building one of them. I understand that you guys started building Paradex kind of as a result of the FTX collapse and how that affected you guys. Can you talk more about that?
Yeah, sure. Yeah, FTX was pretty devastating for us, both on a personal and professional level. So at the time, Paradigm, which we'll talk a little bit more about the relationship between the two entities, but Paradigm, we lost 7 of our top 10 clients basically overnight when FTX went under. And then on a personal level, both myself and the founder Anand basically lost our entire net worth. So I had all of my crypto on FTX, unfortunately, after basically holding it in self-custody for years, made one mistake and, overnight, basically entire portfolio nuked. Before that, we were, flirting with the idea of building our own exchange, particularly, on chain. But after FTX happened, it wasn't a question of, should we do this? It was really a question of hey, we have no choice. We can't let what happened to us basically happen to anybody else, ever again. And the technology had basically evolved to the point where we were hey, we can do this. We can build on chain. Basically we just got to work and said, okay, enough is enough. Let's build this properly.
And you mentioned Paradigm. We could go into that now because you brought it up. When I first had my first chat with you guys, I was confused and I thought maybe it was Paradigm, the fund, and you clarified, no, that's not. It's a company that you guys started. And, can you explain kind of what Paradigm is, the kind of size of the entity, how much volume it trades, et cetera, and then, how that's related to Paradex and the mission?
Yeah, certainly. So Paradigm is the largest institutional network in crypto options. It trades over 2 billion a day in trading volume, again, primarily in options. What is a liquidity network? It's kind of, language that many retail or household, people won't understand. But basically, you can think about it as an institutional exchange. And instead of using a central limit order book, we basically use a protocol called RFQ, request for quote. And this enables basically really large transactions to happen with extreme immediacy and a bit more privacy than executing on a central limit order book. And so, that business really, its main customers are institutions, and so it's not as much of a retail household name. But basically, that business does about 30 to 35% of global market share in options, in crypto options. And it's basically pivotal infrastructure to institutions that are trading, options at scale. And I think this was a huge edge for us as we basically went and started to build Paradex because, one, we basically didn't need to go out and fundraise, right? We'd already had raised for Paradigm and basically just incubated Paradex out of Paradigm. And it also gave us, we had deep, industry expertise. We had a huge network. Paradigm has over 3,000 institutional customers. And so we had this, deep relationship with market makers that we could basically leverage as we were bootstrapping liquidity on Paradex. And so it really just allowed us to spend a lot more time just building the product itself and not having to deal with, learning how to manage a company and fundraising and all that stuff. So it really just allowed us to kind of get running from day one.
Okay, and then you had mentioned previously that you built Paradex really to accommodate the like everything that Paradigm was doing. Can you go into that a bit more?
Yeah, so I think Paradigm, at its core, Paradigm was always non-custodial. So Paradigm basically worked with other exchanges, Deribit being the most, the largest options exchange. And basically, to us, the exchange was like a clearinghouse. So all of your open positions and the custody of assets basically happened on those exchanges, and people just came to Paradigm for, basically getting liquidity and getting good prices. And so at our core, we were always kind of this non-custodial ethos. And so that translated really naturally to basically the DeFi world, where it's like, okay, hey, the entire reason we want to build these exchanges is that so custody and basically all of the risk engine logic is living on chain, which basically prevents situations like FTX from happening, where there's some backdoor internally in a centralized database that allows FTX to basically withdraw customer money without their consent. And so, yeah, basically everything of the ethos of Paradigm fit very naturally to basically moving to a full decentralized stack. And that really just allowed us to say, hey, this design choice works for us. It fits everything we're doing, and let's just go ahead and start building.
And so right now, Paradex is a perpetuals DEX essentially, right? And then I guess later will be spot. And then do you plan on bringing, like right now you're servicing Deribit and I guess some other exchanges for the options markets, but do you plan on bringing all that volume, that $2 billion a day approximately, to Paradex and running an options market there?
Yeah, so a big part of the future, obviously, for us, we get lumped into this perps DEX narrative, but for us from day one, it was really about building a full stack exchange on chain. And so always as the core of that, it's been perps, spot, options. And so, yeah, we're very excited about the opportunity to basically bring a lot more options trading on chain. And so that will be a very key focus of ours once we get the options market up and running. And then we can also talk a lot more about like how that will play into our vault structure and like basically all the cool yield strategies you can basically do on chain once you have a really liquid options market on chain. So we have the vault structure exists today, and I think basically the simplest way to think about vaults for us is this is like our big bet on the future of asset management on chain. And so vaults are basically like a wrapper. It's like a special account on Paradex, where you can delegate trading authority to another party. And so basically, users deposit money into the vault, they get a tokenized representation of their percentage share of the assets, and then they delegate basically the strategy and trading to another user. And the cool part about this is basically the vault structure then inherits all of the things we do on Paradex. So whether it's spot trading, options trading, perps trading, portfolio margin for better collateral efficiency, basically it gets everything, it gets all the features of the exchange in this one account. And the really cool part about that is that basically allows like an infinite design space for strategies. Whether that's, somebody who wants to do like an HFT strategy, it's someone who wants to do structured products using options. So really, like anything can be done out of that box. And so this is like our long-term bet on building basically asset management on chain. Yeah, we've seen some pretty good adoption to it today. Obviously, we have our protocol vault, Gigavault, that has about 50 million in assets. And then we have some early innovation happening. Some guys like Quetta Research have basically built what we call VTFs, basically ETFs, but for perp option or perp futures. And that has things like double X levered baskets of, thematic, meme coins or majors or things like that. But really, we think longer term, as more and more institutional and larger, more trusted people come to the space, they're really going to want to leverage this to basically get access to huge distribution, whereas they can basically manage, a full stack asset management business, via the Vault protocol.
And so does that work in a way where if I go to the vault and have some, let's say I want $10,000, managed for me, is it kind of like a market where I can go and look at different strategies, different traders or whatever, and then see how their performance is, and then just kind of allocate to one of those strategies, or how does it work?
Yeah, exactly. So basically, you go to the vaults page on Paradex, and it basically just lists out, here are all the available vaults you can have to deposit to, or if you want to create your own. And so today, yeah, I think the big thing that needs to be solved is we need more trusted entities to basically build and launch their vaults. Because I think one of the gaps that we have now in the market is, like if I, for example, start a vault tomorrow, nobody knows who I am. I don't have a track record, so bridging that trust is quite difficult. But I think as crypto continues to get more and more mainstream, and as more institutional players come into the space, or just sophisticated market participants, they can basically spin up, vaults, and then it's all of a sudden you have a trusted party that's willing to manage capital on behalf. And then you could basically think about this page as, scrolling through all the available funds, all the available strategies, and we'll basically be able to sort and rank them based on different risk profiles and things like that. And I think what the cool thing we've seen early days from there is basically like if you have a trading community or you have a tight group of users, basically someone is managing, capital on behalf of this community. So it's a little bit more of like that is a bit of an evolution on copy trading, right? But it's much more holistic. But I think this is just like super early days for this, because I think long term, this will bring, true asset management on chain.
So we just had this massive Black Friday event, but really when it came down to Black Friday, we saw a lot of things breaking from exchanges, APIs, specifically Binance and others. No one could really access anything. Limit orders broke, and traders lost $19 billion in value. Binance gave some sort of peace offering of $280 million, which I'm pretty sure that a lot more was liquidated on their exchange than that. But I think I'm pretty sure that you guys held up quite well. So even I think Lighter did some refunds or gave points for things not going well on their exchange either. So can you tell me about Black Friday, how Paradex held up? Did you guys have any problems?
Yeah. I think, listen, overall, maybe I'll start by saying like what happened in the space, then I'll focus on Paradex. But yeah, I think it exposed a few things, like three things mainly. That overall exchange infrastructure in crypto is still pretty nascent, and in times of deep stress, it's still not performing, very well. I think it also exposed that like longer tail liquidity, particularly in these stress times, really just evaporates, right? If a handful of market makers are in the market and all of a sudden they have to close out for whatever reason, there's really nobody else to step in and provide liquidity on the long tail.
Yeah.
I don't think that's the case for BTC or ETH now and the majors, where they do have such a diverse group of market makers in play. And I think also the third thing there is that basically like the rules still aren't very transparent or very well documented, and this basically showed itself in like traders getting ADL'd, and basically getting auto closed on positions that were winning. And that, for it doesn't sound that bad, but if you're a basis trader and you're long short and all of a sudden your hedge leg blows out, a lot of people ended up completely blowing up that were putting on basis trades. And so I think like the transparency and really the understanding of like how does features like ADL work and how would this affect me? Am I at risk of ADL if I think I'm essentially delta neutral? So I think there's a long way to go in terms of just building up the overall infrastructure. How Paradex managed, I think we weren't without our share of challenges either, right? Like we got hit with a massive barrage of activity at for me it was about 5-6 in the morning in Asia. And basically we had to process a huge surge in liquidations because, people were on leverage, the market dumped, 30-40%. And this did put a lot of pressure on our insurance fund, but overall, it held up very well. We did have, a small amount of like trade busts that happened on the platform. We quickly determined, who was affected by that. We refunded everybody. But overall, the exchange was up the whole time. So we never had any full downtime of the platform. And all these are learning lessons for like where the pressure points in the system are, how we can increase throughput and scale to make sure it doesn't happen again. And it really just like all these things are like tests. Like you never know where the weaknesses in the system are until you really get something stress test. But I think we overall performed very well. Was super happy about how we made it through the weekend. And now we're really focused on how do we handle like 100x the load that we got on Saturday morning.
Yeah, exactly. So there's a lot of people out there kind of comparing, because you have this like popularity and this attention to these perp dexes. And so I think it's important to kind of just let the audience know like what major differentiating factors do you guys have from the others?
Yeah, I think if right now, if I was just like very simply, what's our value prop at Paradex, I would focus on three things, right? The first being we're zero fee perps trading. So retail users basically pay no fees. Two is we actually publish stats on how good our liquidity is versus executing on all the major centralized venues or other dexes. And then privacy, which is one topic that I know we'll touch on more, but we have a fundamental belief that finance can't scale without privacy. And so we basically are encrypting positions on chain very shortly to make sure that basically you have that privacy when you're both executing and about your positions after you've entered them. And so I think that those are the three main value props. And then I think on top of that is, I hate being bucketed into, oh, you're just a perps dex, because again, as we talked about earlier, that's really never been our vision. It's obviously the largest market by far when you look at different types of instruments, but we've basically built the system from day one to handle spot, perps, options, basically all traded from a single unified account. So it's basically like we want this complete trading experience on chain. And so every design choice we've made along the way, whether it's our tech stack or whatever, has always been towards that bigger vision, which is, much more complicated than just building, simply a perps dex.
So the privacy feature, is that something similar to what Aster has with their dark pools? Is that, maybe it functions differently, but does it serve the same purpose?
Yeah, so it's a bit different. So I guess there's when I think about privacy, there's kind of two main categories. There's what happens, pre-trade and during the trade, and then there's what happens after the trade. So obviously, any of these systems that are built on a fully transparent blockchain once you've entered into a position. And we've seen this, with James Wynn. We saw this with the recent short whale, basically on Hyperliquid that shorted into the flash crash.
Mm-hmm.
That basically, hey, all the positions that I hold are now visible to everybody with a block explorer. And so, I think that's super fun for like Twitter speculation. Like, oh, it's very cool to see, oh my God, this guy has a $1 billion short, or oh my God, is James Wynn going to get liquidated? But at the end of the day, if we're trying to scale finance on chain, like it's not going to work, right? Like no like big institutional players or more sophisticated participants are going to join a market where, I like to say it's like, imagine going to a poker table and playing with your cards up, right? Nobody's going to enter that game. And so it's really important. Basically, our stack is that our data availability on chain, we're going to actually encrypt it. So when you encrypt it, basically, you'll be the only one to know what positions you hold. But somebody exploring, the Paradex or our state on Ethereum L1 or our L2, basically will have no idea what positions anyone else has. So you can't, go hunt someone's liquidation point or basically try and steal alpha from them in terms of what positions they have on or don't. So that's kind of the post trade, and then pre trade. So obviously things like dark execution in dark pools is one way of basically masking, the size of the order, right? Obviously on a central limit order book, everything is visible, right? Every order you can clearly see on chain. And that can be good. I mean, the interesting thing about dark pools is that, it's less transparent in terms of like how big this order is. But at the same time, you sacrifice immediacy of execution, because typically how these things work is it's like a midpoint peg. And basically you say, hey, I want to sell this much size. And if there's someone matching on the other end, you slowly nibble against this large order. But that doesn't solve things like, what if you want to trade huge size very quickly?
Right.
And so, for us, number one, our order book is off chain. So you can't basically see who is trading what. You can see the orders, but you don't know what address is trading what. So that gives you some level of protection in terms of, I don't know exactly who I'm trading against. And number two, and this comes into paradigm integration, long term, we want to offer multiple ways to execute. So we want to offer RFQ, which is a bit darker execution because you're only asking maybe one or two guys for prices instead of everybody in the market. We'll have central limit order books. We'll also build, dark pool matching, but really give users the choice as to like, how do you want to execute? Because for us, liquidity it's so much more complex. There's what price do you want to get? How immediately do you want to execute? How much, privacy and risk of information slippage do you have? How complex is the order that you're doing? Is it one leg? Is it more legs? So I think we want to basically give maximum ability for users to choose how they want to execute long term.
Yeah, that makes a lot of sense. You mentioned the layer 2 that you guys are building. Can you talk a little bit more about why you guys built the layer 2? How performant is it, and kind of what are the plans to maybe potentially expand the ecosystem? Is the only app going to be Paradex? Are you going to have other builders come in?
Yeah. Yeah, no, good question. So basically we have the Paradex chain. It's a ZK rollup on Ethereum. And it basically functions as an app chain. And so this is a thesis that we've had going back 2-3 years, which is basically, when we were first building Paradex, we're like, okay, where do we want to build this? We looked at Solana. We looked at, some of the optimistic rollups at the time. ZK was kind of just getting started. So there were fewer options than there are today. But basically what came down for us is we're like, we know the ridiculous demands of throughput for an exchange, particularly in a world where we build, spot, perps, options, multi-collateral. Like just the complexity of each transaction gets so big in that state of the world that we need like insane amount of throughput. And if we went on to like a general purpose L2, those are optimized for exactly that general purpose, right? Whereas we have a very specific purpose for our chain. And so we need to make basically compromises between, decentralization, security, and throughput, with the three main things you need to trade off when building a chain. And so we felt very strongly that we needed to have the ability to customize our experience. And so that's why we went down the app chain route. We've always been super bullish on ZK, basically as being, with optimistic rollups, we can't, as an exchange, I can't take the risk that like my transaction gets reversed 7 days later, right? So like the mathematical guarantees that basically you build a proof, it proves that all the computational integrity was there, and then it writes state down to the most secure blockchain in the world, Ethereum. Basically gives us the most confidence in the overall security of the system. So we built basically our L2 is a ZK rollup. And right now the chain is not fully open, but we plan to open it up to developers. And so focus number one is to build the exchange, build up the liquidity hub, and then we'll basically open up the Paradex chain to developers to basically build on top of that framework.
Makes sense. Earlier you mentioned this like retail price improvement. Can you kind of explain what that is? Because that's also, I think, something quite unique to what you guys have done.
Yeah, sure. So retail price improvement, I guess stepping back, like the hardest problem in building an exchange is not necessarily building the tech, but it's how do you bootstrap liquidity? Like this is I think the hardest challenge in an exchange, because the network effects are so strong, and like how do you kickstart and that flywheel?
Yeah.
And so the thing that we kind of came off after kind of banging our head against the wall for a long period of time was this concept of retail price improvement orders. And basically you can think about this as a special order type that allows a market maker to quote directly against non-toxic retail traders. So think about it this, like you're a regular trader, I want to go buy BTC perp. How does the market maker know that I'm not, some super sophisticated HFT? Well, if they place, their orders into the market using this RPI order type, they basically can guarantee that the other side of the trade is not some sophisticated shark HFT. And so that gives them comfort that like, hey, I can show more size, I can show it tighter because I'm not going to get run over by some super sophisticated participant. And basically that allows the opportunity to improve prices for non-toxic traders. And that's really been integral for how we've bootstrapped liquidity. Also, it's super important for how we've basically developed and moved to this zero fee model, because basically we can charge zero fee for these super non-toxic users.
And who ends up paying that fee?
Yeah, so the market makers actually pay. Okay. So they will pay to trade a very small fee. So right now it's about 0.3 bips. They pay to trade against retail. But I think the net effect is super important, is that because it's zero fee, obviously the market makers will mark up their spread by the fees that you charge them. But the net effect in terms of savings on fees is way more offset because you've curated this like very high quality group of users for market makers to price against. And that's basically where your net execution cost of, fees plus spread become way more compelling in the zero fee, RPI world.
So that no fee for retail traders is that for every type of trade that happens on the platform? For example, like, if I wanted to, let's say that I opened a Bitcoin long, for like $1 million, something like that, at the bottom of 2022 after FTX, and I wanted to keep that open until, 2 years later or something like that. If you went to any other exchange, you'd pay a fortune in fees for that. Is that what we're talking about too, or is that something different?
So I don't know if you're getting at funding rate fees, but yeah,
funding rate, yeah.
You still have funding, right? Because funding is basically the mechanism by which the derivative, the perp, stays in line with the spot price. So
right.
You still pay those fees, but right, those aren't going to the platform. Those are just going to the person on the opposite side of the trade.
Yes.
So you will still have funding rate, but you just basically don't pay fees on the entry and exit of the trade.
Now, a lot of people have known this for a long time, but it's been going around a bit more recently. I think Coinbase and Binance had like a social media little spat today. But this question is about, how do you guys decide which projects and tokens get listed on the perp stacks and which ones get listed on spot?
Yeah, so it's another good question. On the perp side, I think one of the advantages that the DEXs have is basically speed to market. So we've been, I think, very aggressive on what we list. We're constantly in the Discord with our users. People are saying, hey, I want to trade this market, or we see some new hot listing. And, basically for us, speed to market of the new perp is a huge edge.
Yeah.
And so it's really become a core part of what we are, is really like, how can we get to market as quickly as possible with the new hottest listing. So I think that's, something that a DEX can be very nimble at. And it's, for a perp, basically the only thing you need is, how do you get a price feed for the Oracle to basically
Mm.
price to price the perp. And so long term, we'll be basically working to like continue to build out our own Oracle infrastructure to allow us to do. We want to get to a place where we can do instantaneous listings on everything.
Yeah.
On the spot side, we're still we haven't launched spot yet. We're launching it in the next few months. But again, I think, us being a DEX, we basically want to build permissionless infrastructure for anybody to spin up a spot market, perp market, and bootstrap liquidity. So,
Yeah.
Our world, we should not be the gatekeepers, right? We need to be the platform that's enabling these markets to happen permissionlessly. And we need to come up with a mechanic to basically bootstrap liquidity, because it's not enough to allow anybody to spin up a market, because that's kind of the easy part. That's a technological solution. But then how do you solve the liquidity bootstrapping? And so we have some ideas there that we're going to be launching. Can't talk too much about them yet, but about how to also bootstrap liquidity on these new, longer tail markets.
So yeah, I mean, that's great. I think that I'd love to see a world where, getting a Binance listing or whatever else, these centralized exchanges. I'd love to see a world where that is irrelevant. Like
Yeah.
when these decentralized DEXs like you guys are building become kind of commonplace, and people learn that's just like, I hardly ever use Sexes. I just don't like the experience. I hate the KYC. I hate them taking custody of my funds. I use DEXs as much as I can. I don't really do so much trading, but I think like if you could do a really cool permissionless spot market, I think that would be incredibly popular. And then if you figured out the mechanism to bootstrap liquidity on there, would be great. And so then you can have great projects who come to a popular exchange, and then just have a good listing there, and people can trade there. Can you explain the difference between a DEX spot market and experience of something like Paradex versus Uniswap or PancakeSwap or whatever?
Yeah. Yeah. So basically it comes down to, what is the protocol which you're matching buyers and sellers, and basically doing price discovery, right? So like the Uniswaps of the world are basically AMMs. You have these two pools. Somebody deposits, a stable, typically, like USDC, against the underlying, crypto. And then, whatever the starting ratio is, that, and based on a formula, mathematical formula, you can basically have price discovery, um, uh, that's very structured in the way that it works. And the challenge with that is, it's really good for bootstrapping long tail liquidity, right? Because I think central limit order books have proven time and time again to be way more efficient in price discovery for liquid instruments. And a large part that has to do with capital, right? Like if you have to put both these, I got to put USDC, I got to put this asset, it requires a lot more capital to do that than if I have, a traditional central limit order book, where I don't necessarily have to be, posting both assets at all times. And so I think that it's a very effective today for the longer tail. And so I think when we put spot on ours, I think, we'll likely have a longer term, like a hybrid design, where we maybe use some AMM liquidity, some central limit order book liquidity. I could even see a world where you basically start AMM and you graduate to central limit order book as more and more liquidity forms around it. But again, this all comes down to, how do you get market makers to ultimately be incentivized to put prices into a central limit order book versus, the cool thing about AMM and that innovation was like anybody, that was its own permissionless listing, right? Like anybody can spin up a market. They just need to put these two pools of capital. It's just not particularly efficient in terms of price wise. Like if you've ever done an AMM and you try to buy, a huge chunk of the asset, you end up with massive slippage on it. And so I think between RFQ, I think between central and order books, like all the protocols that we discussed earlier, that we want to allow multiple protocols for price discovery and let the end user figure out, how do they want to, what's the optimal execution for them. is the same way we'll basically approach spot on our DEX, which is give people maximum flexibility and choice in terms of how they want to find price discovery on an asset.
And talking about like spread and slippage and things like that, you touched on it earlier, but maybe you can dive into it just a little bit more. Can you just talk a bit more about that better than Sachs liquidity and how you guys are able to do that?
Yeah. I think again it comes back to this like flow segmentation that we've done, right? I think if you look at kind of the general ways in which people have tried to innovate here, you look at a lot of dexes are implementing something called cancel priority. And basically that means within a block, right? If you're running on a blockchain, within a block, if I have an order outstanding, before the block closes and the transaction gets committed to chain, I can basically slide in a cancel order. And I can basically reverse, any quote that I had in market. And so if you think about that from a market maker's perspective, I can show unlimited size basically in this order book, because I know that if the price moves against me, within a second or something like that, right, I can basically slide in a cancel and I can get out of the way. So it basically gives you a last look as a market maker to say, oh, no, the price changed against me. I'm just going to cancel and get out. And so the net effect is to the buyer, right, who placed a market order, the price that they thought they were going to get, what the screen looked like at the time could be very different from the ultimate execution price because a bunch of people basically canceled on the way. And so that it's really that slippage, and that is like a hidden cost, right? Because unless you're a sophisticated guy and you're basically taking snapshots of what the order book looked like versus the ultimate price you get, like how do you really know that you're paying that tax? You have to be sophisticated to track it. So that's basically why, like, when we were looking at design choices, we're like, hey, we don't think cancel priority is necessarily the best way to tackle this, because it's basically a blunt tool where it treats all users, whether you're a retail guy who wants to buy Bitcoin because you think it's going up in 6 months, or you're a sophisticated HFT. If the price moves against me as a market maker, I'm going to immediately cancel on you. Mm-hmm. So basically, the non-toxic users end up paying for the toxicity of the toxic guys. And so they pay more execution costs. And so that for us was like, well, we don't think that's a great design. What if we can basically segment these users and basically show that, like, hey, this is a very high quality, group of users to trade against, meaning that they don't have any edge against you within, 1-2 seconds of the trade going through. And that just basically enables market makers to, again, quote, much larger size, much tighter, because I guess if you think about it, on average, a market maker, it's a 50-50 coin flip, whether immediately after they trade against a retail user, the price goes up or down. And right. They trade at scale, millions and millions of trades a day. So in that case, you can basically assume that, like, I'll be zero at scale, and then I can basically just make a small spread on it and be comfortable that I'm not going to get run over by some sophisticated participant.
There's been quite a bit of chat about Paradex's point system, and I think like season 2 is about to launch right now. Can you tell anyone watching, how they earn points, what are XP and how do they work, and just a little bit about that.
Yeah. So XP for us is basically like our point system at Paradex. So we're in the middle of season 2, and basically it's like a universal reward system designed really with one principle in mind, which is, how do we reward real users, using the platform in a sustainable long-term way, right? Obviously, there's no secret that in DEXs today, there's a huge amount of farmers that are in the community, just trying to farm XP, and we're very aware of that, right? It's very obvious to see, and so we want to basically have our point system designing real users that are not just here to farm XP, that are here for the long term, right? Because I assume once we list the token, there'll be a huge drop off in users. It's kind of inevitable. Every platform experiences it, and so we're trying to identify who are the real users that are basically using Paradex because they think it's a great product and they want to be here long term as we continue to improve and grow. And so everything we do is basically around how do we identify real organic behavior and reward that. But I mean, as an exchange, the nice thing is it's very easy to understand kind of like what good behavior is. It's, are you trading? Are you holding positions? Do you have significant capital on the platform? All these like pretty basic metrics are things that reward. And then obviously, if we see people just trading back and forth with, $5 of capital at a huge scale, that's something we don't want to incentivize or
Right.
reward. So, that season 2 is live now. And so, basically we're looking to reward users for using the platform in a sustainable way.
Cool. Makes a lot of sense. Well, thanks, Rob. Thanks for coming on. Appreciate it.
All right. Thanks, Kyle. Appreciate it.